Hey, Traders Mindset Reset. It's a non-farm payrolls week and free cash Friday today. Now, throughout the week, I've tried to really emphasize simplicity and reproducibility to traders, sticking with the basic best playbook trade setups. And the simpler you make it, the easier things can become. Now, it's a non-farm payrolls week, and with no surprise, of course, we traded into the Friday on most major US dollar cross pairs. We had excellent opportunities on non-US dollar cross pairs. Throughout the week, we had first red day opportunities on pound crosses, euro crosses. We had trade opportunities on Japanese yen crosses. We saw huge moves on cryptos. We saw moves on the backside of the week on Free Cash Friday. We saw oil come out of a large explosive move. If you look on your longer time frame templates, a massive short squeeze that had built into the end of the year. And that's the next thing I want to sort of talk about. I'm going to answer some questions today. So number one, we're going to talk about simple duplication, reproducibility, basic templates, and understanding the new month, new cycle, daily charts, keeping things really simple. Now, I got into a discussion today with a trader who again is hunting out 3 days of breakout traders in the markets and trying to counter trend a market in breakout. Now, I emphasize this over and over again. Go back. I don't care if you go back through 10 years of 10 different charts to understand what 3 days of breakout traders are. Constantly trying to counter trend a market at all-time highs or at highs of the new month on the front side of a month is a market in breakout. Once a market breaks out, that does not mean that it automatically is going to be a reversal trade. Markets can stay in breakout. How does price behave on the day? Now, we can have markets that are broken down that will give 3 days of breakout traders as a counter trend on a weekly template. A weekly template. It's Friday. It's Friday. That's the closing range of the week. So if you're looking for a reversal day at the high of a month, on a Friday, go back and print off 10 of the best ones that you can find so that you know what a reversal setup looks like to build your muscle memory. If you're counter trending a market on a non-farm payrolls Friday, go back and understand that I've talked about how they will use the news in a lot of cases as the pump or the dump, and we'll see week 1, week 2, or maybe a week 3 reversal. But the news can often act as the lift or the escalator on the front side of a move. Now, a market can continue to trend the entire month. So not just because a market closes in breakout and it's at the high of the week or the low of the week, how does it set up on the date? Reversal templates set up in a very specific way. And we've gone over multiples of those. They're in the course, in the PDFs, as well as on the channel. And I've posted several screenshots over the last few years of those types of opportunities. And so when we get a non-farm payrolls Friday and traders are looking to counter trend it after the news, the Japanese yen was a great example. It went vertical on the news and faded into the second hour, broke down, and we got a nice first bounce continuation at the beginning of the 10 a.m. hour, back through the lows of, back to Tuesday's low of the week, I believe. Tuesday's low of the day, which forms a new higher low heading into a non-farm payroll. So as we've talked about previously, it's not unusual to see templates morph into Friday. We can get great front side moves. We can get great day 2 Thursdays heading into payrolls. We saw second day continuation, first red day continuation trades after on pound crosses, large moves. We saw cryptos break down again, day 1, day 2, day 3 days of breakout trades on Bitcoin. And those are great opportunities. And especially heading into a non-farm payrolls Friday, making sure that you lock in profits. So several traders sometimes will, they'll sell and hold or buy and hold. And lo and behold, on a non-farm payrolls day, even if you're spiked out, the market can continue in that direction. But often with the spike, spreads are widened. And if you have a stop in place, sometimes that stop will get filled maybe 25, 50, sometimes even further away from where your stop price has been put in because there's slippage and they also widen the spreads. It's important to understand that, which is why I don't participate prior to a major high impact news event. Now, the next part of that is in terms of mindset, because again, mindset is the number one reason why most traders will fail. It's their behavior. And I talked about this in all the most recent videos, why it's so important to focus on duplication and simplicity of 99-to-1 opportunity setups. Now, I say 90-10, but typically they're 99-to-1 when you have all time frames driving those moves. And when a market breaks down and reverses and coils into either a first red day or a first green day, I want you to go back and understand the time frames have flipped. The time frames have flipped. So now we have higher time frames driving those coils. When they go sideways and they're about to explode, that's why it's such a powerful move. We have everybody on board, and those are the best setups I like to look for when they happen in the US session or the Asian session. We can see that often on metals. Sometimes on the backside, we'll see a beautiful coil into the close of the US session. We saw that this week, I believe, on the Euro-Australian, some of the Australian cross pairs. Front side, they had major impact news, and then the reversal after first red day trades, and then inside day on a few of the pairs. So this is the part of the mindset that I talk to traders about. Some traders are really stuck on, they get frustrated because they trade one or two markets all the time, and they're always trying to catch the low and catch the high. And on certain days, they get chopped up, or they are counter trending a market that's going to continue to go against them, which is why I talk about rinse and repeat setups. Now, there's certain days that you don't want to counter trend. The markets will shift or already be moving prior to the session. And some traders' skill and expertise does not dictate to be trading those markets. Those are the days that they'll do damage to their account or get into a condition where they can potentially go on tilt. And when they go on tilt, they can engage in impulsive, irrational behavior, over leveraging, moving their stops, not using a stop, holding on to a loser. And a lot of that price action is built upon that. And that's why you'll see sometimes the explosive collapses through when a market is put in a false low, and that's the breakout, pullback, continuation, same thing in the long direction. And that's where we can see markets go on range expansions where traders have been sucked into counter trending them, which is why I keep emphasizing rinse and repeat setups. If you're constantly going to try and be a magician and a scientist and read levels and all these little minutiae within a chart itself, those are situations that you can end up doing serious damage to yourself on. Now I'm looking for obvious. So let me make this really clear to some of the traders that are frustrated, or they constantly say, well, this setup didn't work and I traded it. If you take a trade, that doesn't mean that there's a setup just because you think there's a setup. It's either a setup or it isn't. Now, today, again, I had this discussion of traders saying, oh yeah, another one of these 90-10 setups that didn't work. And my response after looking at the charts is, you're counter trending a higher time frame. There's no setup there. Show me the setup that you have printed on your wall. Like my friend Steven, I talk about Steven all the time. His model is very simple and he does not screw around. And if I said, send me a screenshot, he could probably send me, I always say he could send me a dozen different instruments, but Steven could send me 100 of the same rinse and repeat setup on any time frame. That's the beautiful thing. He can send it to me on a 5-minute, a 1-minute, a daily, an hourly, a 15-minute, the same setups, because they are fractal. And so he's built his muscle memory, and he doesn't care how I trade. He doesn't care what setups I want to look for. You know, I always joke, I trade reversals after 3 days. Steven likes to trade them after the 3rd hour. But he has other criteria that when they're met, he'll hit the trade. And his response to me always is that the trade presented, I had no choice. That's my job, is to execute the trade when it presents. Now, he knows exactly what his setup needs to look like in order to indicate that he's got his edge in the market. So if you're frustrated, there's a couple of things to really think about here. If you're constantly just trying to counter trend a market, understand you're going to get for the lack of a better term, probably get your teeth kicked in, because you're just trying to counter trend all the time, versus having a setup where the market's behavior indicates now that the trade setup that you're looking for is actually playing out. So if you're looking for 3 days of breakout traders, you know, I use the example today of Bitcoin, and I'm going to go over this again. Higher time frames. We're trading off of daily charts. Those setups are based on higher time frame setups. Markets that close and breakout. So if you're getting caught in minutia, you're missing the bigger templates, like a weekly close and breakout. It's pretty obvious. But when they close it on a smaller time frame, traders are getting caught in the minutia. They don't even see a market that's closed and breakout. So again, we'll go over this. We'll go over this on the next video. But the reason I'm emphasizing this is that there's so much simple money laying on the floor. Now, this is where traders get dumbfounded. You know, they think their job is to go and trade the market every day. All I'm doing is sitting around waiting for some templates to unfold. There's ones that I've missed. There's ones that move in London during the middle of the night. A great question from Burke in Netherlands. Time frames, you know, a lot of great moves happen in London, especially on a non-farm payrolls week. So if you think just really simple, if they're going to move the market early in the week on the front side, sometimes it'll happen in Asia. Right off the bat on a Monday, we saw that this week. It takes off right away. We had markets closing at extremes on Friday. Boom, Monday morning has traders trapped and they move it in Asia. We see a second day continuation trade in the London session, range expansions on day 2 in London. So when they make the US session chase trades further away, you have to start to think about why that is. And a lot of traders will say, yeah, I caught that great move in New York, or I caught this, I caught that. And on the front side, that can often end up being the order flow that continues the move. We see 3 legs. We can see 3 days, 1, 2, 3. We can see day 1, day 2, signal day. Now it's a non-farm payrolls Friday. So if the basic template that I've gone over, the basic model in the playbook is Wednesday's a signal day. And we saw that on a lot of cross pairs this week. We saw Tuesday as a signal day, and we saw markets that went 1, 2, 3 from Tuesday into free cash, non-farm payrolls Friday. So simple thing. So here's the thing. Instead of trying to find all these setups, find 1 or 2, just if you want to narrow your basket down, and you just go through and you're looking for 1 or 2 simple setups. That's all I'm doing. And as I state, 1 or 2 coiled market opportunities in a week, 2 parabolic ACB templates in a week, scalable. Significantly compound your account. Now, a couple of traders have messaged me this week and told me they've more than doubled their account on a couple of trades. Now, that's not over leveraging. That's because they're in a market that they scaled into, and it exploded on a range expansion and went right to the close of the day. Significantly compounded their account in 2 parabolic opportunities. Not over leveraging, managing their risk still, but the trades were taking off as they were getting in. They were in profits immediately. Now, I talk about science projects because I have zero interest in figuring out these minutia little charts so I can get trades every day. I'm looking for setups where I can make a lot of money. And so if I don't see those setups, and I might have a nail and bail, gold gave a couple of great nail and bails this week, which were just trend continuations with the higher time frames, dump and pump, Wednesday, Friday, exact same trades. So if you're constantly trying to counter trend markets, understand this. Unless you have a setup, you're going against a higher time frame. And if that higher time frame is still in control, so for example, we had oil reversal 3rd hour, and the higher time frame came in after that pullback, that stop hunt, and continued to march back up towards the high. We're in a market that's in a breakout. It broke out the first day of the month. It took out monthly highs on a couple of months in a market that had coiled into the end of the year in a short squeeze template. So if you're counter trending a short squeeze template on a higher time frame, yes, we're going to get stop hunts. Yes, we're going to get pullbacks, but we have no indication at this point of a market that's reversing to break down. The reason why I do this and try to emphasize this to traders is simplicity. Like literally make it as simple as possible. I'm not trying to read tea leaves. If you're reading tea leaves, you're still not hunting setups. If you're marking up all these levels inside of charts and counting pushes and, lower lows and higher highs inside. Now, let me clarify that on this note. If you're using daily levels and higher time frames, there is no lower low or higher high unless a daily level is broken. I think I repeat that in every second or third video. I will say it again. There is no lower low or higher high unless a daily level is broken. Now, if we have a market that's broken out of an inside day, as we saw in the Euro New Zealand, we broke out of the inside day. We have a breakout now. That's not a false break. We have a breakout on Thursday. It dumps back down into the high of day level. The trader asked, why isn't that a first red day? We're in a market that's made higher highs on Monday, broke down, dumped down, inside day, broke out again and dumping down. That's the textbook setup. Double inside day for an explosive day 3 continuation trade in London. A higher high, dump and pump template. We're on top of the breakout. Go back and draw your levels on the inside days. We're on top of the breakouts. And so that's the sort of stuff that you want to hunt out where you've got traders trapped. The shorting on Thursday's high of day, the reversal has failed. The reversal has failed. And that's the explosive continuation. Now, after non-farm payrolls, we take out that high of week level. Once a high of week level is taken out, or a low of month, or high of month, or any significant level is taken out, of course, the market can fail. Japanese yen, classic example. First red day, we saw a first red day collapse in the London session. Again, time rotation, beautiful coil, and that's the stop hunt. And it did not take out the low of day level. They get traders going long into non-farm payrolls, explodes, pops the top, and fades into the second hour, breaks down. Now we got news traders trapped at the high of the month and the collapse, third hour. A beautiful coil. It broke the non-farm payrolls candle, a little pump up into 10 a.m., bang, closing price straight down. And that's simple stuff. That's the easy money. That's the easy money. We're on the backside of the week. It's the closing range. It's free cash Friday. We're not broken out. So traders are trying to short the Swiss franc. It's in breakout. Traders trying to short gold. It's in breakout. Simple. Don't counter trend a market in breakout until it has a setup. Either a signal day or 3 days closing in breakout and a horizontal coil, maybe a double tap and a reversal into the session timing window inside of our basic model for trade entry criteria. If it's not there and you counter trend it, that's not a setup. That's you taking a trade, hoping that it goes down because it's up high. We're on the front side of the month. It's broken out. Okay, it's not in a reversal template. The more you make it simple and hunt out simple rinse and repeat templates, if you take a trade, compare it to the best screenshots you've got, and if it doesn't look like that, why would you want to take the trade? It's not about getting lucky. It's not about getting lucky. Rinse and repeat setups that you're building your trading business on. And if you really want to scale it up, trade the scalable setups and just hunt those out. And if you don't get those, don't trade. Now, if you want to be a trader who trades all the time, okay, there's going to be a couple of challenges. One is getting it up to size, and one is it being consistent. One is being able to hold on to side trades on those sides and these little, I got the gap, I got this, I got that, I got the hunt, I got whatever. I'm not interested in that. I'm looking for setups where I can't lose. The same ones, any instrument. And when those markets coil, it's because all time frames are now coming together into that move. And when it's about to explode, as several traders saw, beautiful euro pound reversal on day 3. If you go back and look at the last couple of weeks, that was the third day a low of day level was broken after making higher highs on Monday. Higher highs on Monday, dump and pump. Inside day Tuesday, 1 hour, 2 hours, third hour to the low. Now, go back and look at this on your hourly chart and then your 4 hour. The close on Wednesday on the euro pound at the end of the 4 hour window, that 4 hour candle closed at the low of the week. The next 4 hour candle opened and broke the low and reversed. First hour closed as a pin hammer and kaboom, straight through the high of the month. So simple rinse and repeat. Build your muscle memory, build your skills, build your mindset to only focus on winning setups. I can't do that for you. And I can't take responsibility for trades that you take. If you don't know exactly what your setups are looking for, stop trading. The market's not going anywhere. The market's not going anywhere. Behavior and mindset and beliefs of the trader are the number one reason why traders fail. And they never, ever build a trading business to the levels that it should be at. There's no limits in this business. There's plenty of money to be made, but the trader themselves is their biggest enemy in most cases. Rinse and repeat means exactly that. Find the setups that you can make a lot of money on, hunt those out, and only trade those, and don't do anything to sabotage your good results in between with impulsive, irrational, emotional, and reckless behavior. Have a great weekend, traders. Love you and appreciate you. It's been a fantastic start to a brand new year. 2025 has gotten off with textbook playbook setups. We don't have to mix it with all kinds of other interpretations and tea leaves and I see it this way, I see it that way. I don't care how anybody sees it. I'm just looking for setups. Doesn't matter. If I see that setup and it's the one that I can make money on, that's what I'm looking for. That's the trade I'm going to take. I don't care about any other markets. I don't care what they do. Could care less what anybody thinks, because it doesn't matter as long as you stick to the plan. Stick to the plan, stick to the script, as my friend Steven says. Round kick, round kick, round kick. Have a great weekend, and may the markets go with you.